AI, your daily breakdown of the markets, technology, and crypto trends for April 3rd, 2026. Let's get started. The U.S. labor market bounced back in March, with non-farm payrolls rising by 178,000, exceeding expectations. The unemployment rate edged lower to 4.3%, but this was largely due to a sharp reduction in the labor force. The news has had a muted impact on the markets, with the S&P 500 up 0.11% to 6,582.69. The Federal Reserve is likely to remain on hold, and economists warn it's likely to be a tough spring for job seekers. The data also showed wages rising less than expected, with average hourly earnings up just 0.2% for the month. As the market digests this news, investors are keeping a close eye on key stocks, including Apple, which is currently trading at $255.92, up 0.11%.
Global markets are on high alert as tensions between the U.S. and Iran escalate. President Trump has threatened to destroy Iranian infrastructure, including bridges and power plants, in a series of posts on Truth Social. The S&P 500 is currently trading at 6,582.69, up 0.11% on the day, while the Nasdaq has gained 0.18% to 21,879.18. The situation in the Middle East is being closely watched by investors, with the price of Bitcoin holding steady at 66,856.02, down just 0.05% on the day. As the conflict enters its second month, the U.S. military buildup in the region shows no signs of slowing, and the global economy is bracing for potential disruptions to oil supplies. The Strait of Hormuz, a vital global oil route, has been effectively shut by Iran, and the U.S. has threatened to take action to reopen it. With the situation continuing to unfold, investors are advised to stay tuned for further developments.
Russian oil output cuts are imminent due to Ukraine's strikes on port infrastructure, pipelines, and refineries, reducing export capability by 1 million barrels per day. This cut in output from the world's second-largest exporter will add to the strain on global supplies, already jolted by supply disruptions in the Middle East. The news comes as the S&P 500 is trading at 6,582.69, up 0.11% on the day. Meanwhile, oil prices are likely to be impacted, which could have a ripple effect on the global economy. The reduction in Russian oil exports will also affect the country's state budget, which relies heavily on oil and natural gas revenue. As the situation unfolds, investors are keeping a close eye on the market, with Nvidia trading at 177.39, up 0.93%, and Tesla down 5.42% at 360.59. The global economic implications of this development will be closely watched in the coming days.
Bitcoin may be mispricing the risk of a prolonged Iran war, according to hedge fund veteran James Lavish. If the conflict drags on, it could lead to a fresh inflation shock, renewed fears of stagflation, and a major repricing across global markets. The Federal Reserve would be in an impossible position, unable to raise rates aggressively without risking recession, yet unable to cut rates due to persistent inflation. This scenario could send Bitcoin down another 10% to 20%, potentially revisiting the low $50,000 or even high $40,000 range. Currently, Bitcoin is trading at $66,856.02, down 0.05% on the day. The S&P 500 is up 0.11% at $6,582.69, while the Nasdaq is up 0.18% at $21,879.18. Lavish warns investors to avoid being too levered or completely unexposed in this market driven by war headlines, bond stress, and rapidly shifting expectations around Fed policy.
We're seeing some interesting chatter on Wall Street Bets, where traders are discussing a recent post about Elon Musk asking SpaceX IPO banks to buy Grok AI subscriptions. This news is sparking debate about the potential implications for Tesla, which is currently trading at $360.59, down 5.42% on the day. Some traders are wondering if this could be a sign of things to come for the tech giant, while others are skeptical about the credibility of the report, given its origins on Reddit. Meanwhile, the broader market is holding steady, with the S&P 500 up 0.11% at 6,582.69 and the Nasdaq up 0.18% at 21,879.18. Nvidia is also making waves, up 0.93% at $177.39. As always, it's essential to take social media buzz with a grain of salt, but it's certainly worth keeping an eye on how this story develops.
We're seeing a surge in retail sentiment on Wall Street Bets, with traders discussing the latest jobs growth numbers. The U.S. jobs market is on fire, with growth surging past expectations in March. This has investors bullish on the market, with the S&P 500 up 0.11% to 6,582.69. The Nasdaq is also seeing gains, up 0.18% to 21,879.18. Meanwhile, Tesla is taking a hit, down 5.42% to 360.59. Traders are also keeping an eye on Nvidia, up 0.93% to 177.39. The question on everyone's mind is, what does this mean for the overall economy? With Bitcoin and Ethereum seeing slight dips, down 0.05% to 66,856.02 and 0.23% to 2052.09 respectively, it's clear that investors are still cautious. But with the jobs market booming, it's likely we'll see more upside in the coming days.
Retail sentiment on Wall Street Bets is turning bearish on the S&P, currently trading at 6,582.69, as Iran war news continues to escalate. Traders are discussing the potential long-term supply shock driven by diminished production, with Iran rejecting a 48-hour ceasefire proposal. The U.S. strategy to find their missing aircraft crew member is seen as a constraint on their ability to attack, giving Iran a strategic advantage. With the S&P up only 0.11% and Tesla down 5.42% to 360.59, traders are cautious about the market's direction. The situation is being closely watched, with Bitcoin and Ethereum prices also affected, trading at 66,856.02 and 2052.09 respectively.
Retail sentiment is buzzing on social media, with traders discussing the perils of timing the market. One Redditor shared a story of a friend who liquidated long-term investments due to the war, only to double down on a bearish thesis with puts. Meanwhile, the S&P 500 is holding steady at 6,582.69, up 0.11% on the day. Some investors are using the relative weakness in certain sectors to add to their long-term positions, like Nvidia, which is up 0.93% to 177.39. The question is, will this strategy pay off, or will the market prove too volatile? With Tesla down 5.42% to 360.59, it's clear that investors are nervous. But for those with a long-term view, like our Redditor friend who's holding on to rock-solid companies with no debt, the strategy remains to hold tight and ride out the storm, potentially into the 2030s.
Retail sentiment is buzzing on social media, with traders discussing the potential market implications of the ongoing war. Some are warning that the market's optimism may be misplaced, citing the finite nature of strategic reserves. With the S&P 500 currently trading at 6,582.69, a mere 0.11% increase, and the Nasdaq at 21,879.18, up 0.18%. The question on everyone's mind is what happens when those buffers run out. Companies like Nvidia, currently at 177.39, and Apple, at 255.92, may face significant challenges if the conflict drags on, forcing them to buy components at inflated spot prices. The real test will come when those reserves are depleted, potentially leading to margin collapses and production line shutdowns. Traders are keeping a close eye on the situation, wondering if the market is underestimating the potential fallout.
Retail sentiment is buzzing on Reddit, with traders discussing the potential impact of the U.S. government's oil plans on energy stocks. If the U.S. secures more oil from South America, it could indirectly tax countries dependent on Middle Eastern oil, slowing their economic growth. This has traders wondering if oil prices will keep rising, potentially reaching $180 a barrel. With the S&P 500 currently at 6,582.69, up 0.11% today, and Nvidia at 177.39, up 0.93%, investors are watching energy stocks closely. The question on everyone's mind: how will non-American oil companies be affected, and will this trend continue to drive up oil prices?
Federal Reserve Chair Jerome Powell has given U.S. investors a surprise boost, with the probability of a quarter-point rate hike dropping to just 2.2%. The S&P 500 has gained 3.2%, and the Nasdaq Composite is up 4.1% so far this week. With the Fed keeping its benchmark interest rate unchanged at 3.50%, 3.75%, investors are taking advantage of the supportive backdrop. The S&P 500 is currently trading at 6,582.69, while the Nasdaq is at 21,879.18. Warren Buffett's advice to own the S&P 500 index fund is looking attractive, and with tools like Acorns, anyone can invest with as little as $5. Meanwhile, gold prices have surged over 40% in the last 12 months, and experts like Ray Dalio and Jamie Dimon are highlighting its potential as a safe haven. As the market continues to react to Powell's remarks, one thing is clear: investors are poised for a wealth surge, and it's not too late to get in on the action.
Tesla's Texas factory workforce has shrunk by 22% in 2025, according to a recent compliance report. The company went from employing 21,191 people at the factory in 2024 to 16,506 workers in 2025. This news comes as Tesla's stock price has taken a hit, currently trading at $360.59, down 5.42% today. Meanwhile, the broader market is seeing gains, with the S&P 500 up 0.11% to 6,582.69 and the Nasdaq up 0.18% to 21,879.18. Nvidia is also seeing a surge, up 0.93% to $177.39. We'll continue to monitor the situation and provide updates as more information becomes available.
Tesla's Model S and Model X are nearing the end of their production run, with only a few hundred vehicles left in inventory. The company is shifting its focus to the Cybercab, an all-electric two-seater autonomous vehicle. Meanwhile, Tesla's stock price has taken a hit, down 5.42% to $360.59. The company's efforts to boost sales with cheaper versions of the Model 3 and Model Y have had limited success, with first-quarter deliveries up only 6% from last year. As Tesla bets big on its AI-first strategy, investors are watching closely to see if the company can turn its fortunes around. The S&P 500 is up 0.11% to 6,582.69, while the Nasdaq has gained 0.18% to $6,879.18.
Retail sentiment is buzzing on Wall Street bets, where traders are discussing the impact of Trump's recent rhetoric on the crypto market. A $440 million wipeout has Bitcoin slipping below $66,000, currently trading at $66,856.02. Ethereum is also feeling the heat, down 0.23% to $2,052.09. Meanwhile, Solana is bucking the trend, up 1.64% to $80.25. The question on everyone's mind: will this social media buzz translate to a broader market trend? With the S&P 500 up 0.11% to 6,582.69 and the Nasdaq up 0.18% to 21,879.18, it's clear that traditional markets are taking a wait-and-see approach. One thing's for sure, the crypto community is watching this situation closely, and any further developments could have significant implications for the market.
Retail sentiment is buzzing on Wall Street bets about Iran now accepting stablecoins for oil transit fees through the Strait of Hormuz. This move could be another nail in the dollar's coffin, as ships are charged around $1 per barrel, roughly $2 million per large tanker. With traffic through the strait already dropping and costs rising, traders are discussing the potential implications on global oil supply. Meanwhile, the S&P 500 is up 0.11% at 6,582.69 and Bitcoin is down 0.05% at 66,856.02. The question on everyone's mind is, could this be a one-off workaround for sanctions or a quiet opening for more on-chain payments in energy markets? The Nasdaq is up 0.18% at 21,879.18, but all eyes are on the potential shift in global trade dynamics.
Retail sentiment is buzzing on Wall Street bets as a Reddit post suggests Iran may impose a $1 a barrel toll for oil passage through the Hormuz Strait, payable in yuan or stable coins. This news is sparking discussion about the potential impact on global oil prices and the US dollar. With the S&P 500 currently trading at 6,582.69, a 0.11% increase, and the Nasdaq at 21,879.18, up 0.18%, traders are weighing the potential effects on the market. Meanwhile, Bitcoin is holding steady at 66,856.02, down 0.05%, and Ethereum is at 2052.09, down 0.23%. As traders speculate about the implications of this move, it's clear that social media buzz is driving the conversation, with many wondering how this could shift the global economic landscape.
That's your market wrap for today. The market is caught in a powerful crosscurrent between escalating geopolitical risk and a surprisingly dovish Federal Reserve. On one side, you have severe headwinds, escalating rhetoric from President Trump against Iran, a downed U.S. aircraft, and the effective closure of the Strait of Hormuz. This is fueling fears of a prolonged conflict and a severe oil supply shock, compounded by reports of unavoidable Russian output cuts. On the other side, Fed Chair Powell provided a significant tailwind, signaling the central bank will likely look through an energy-driven inflation spike and remain on hold. This dovish stance is supported by a jobs report that, while beating headline expectations, revealed underlying weakness in wages and labor force participation. The main takeaway for investors is that we are in a headline-driven market defined by a tug-of-war between geopolitical fears and the Fed's policy backstop. This creates significant volatility and repricing risk across all assets, from equities to Bitcoin. Watch oil and safe haven assets closely, but do not underestimate the Fed's commitment to stability. I'll see you at the opening bell. Stay bullish.